Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, it looks like the bulls are ready to take back over today and potentially, kind of reverse to what may be the normal pattern of what we think about November. What's your take, especially when you process the price action from last week?
Yeah, with the price action from last week, especially on Friday, what we did see is a flush to the downside to start the day. And then we had some buyers really trying to step in. And for the S&P 500, we were able to finish in the green. And so that also created this hammer candle, if you're looking at the technicals there, which is actually bullish. And we were able to defend the 50-day moving average. Now, obviously, we have some really decent news over the weekend, or the market perceives it to be really decent news here when it comes to the government shutdown. Hopefully, over the next couple of days, we actually see that being resolved here. And that's why we are seeing equities moving higher, yields also moving to the upside as well, kind of that risk on trade, selling out of treasuries, getting back into the equity markets. And you're seeing the traditional sectors that we would like to see outperform really doing so this morning. You have technology, communication services catching a bid, industrials also catching a bid as well. Keep your eye out on the airlines. Those stocks are actually moving a little bit higher here today. And now we are trying to resolve this 20-day moving average if you're looking at the E-mini S&P 500 futures. And I think that's going to be the very key area of resistance. We're about 10 points above it right now if you're looking at the futures contracts. But if we're able to close above that level, at least today for the S&P, I think that's actually a very bullish sign here, given the environment that we have been in. We had a lot of hedging activity taking place last week, a lot of puts being bought, and now we might see an unraveling of those puts, forcing dealers to buy back into this market, pushing prices higher.
Okay. All right. Let's talk a little bit about this shutdown. So it took more than a month. We're in the, kind of 40 plus a day window period now, but there's progress, and it seems like the market is breathing a sigh of relief on this. When you think about the progress that's made, before when there was no progress, it seemed like the market just shrugged it off. But now it seems like there is some optimism. What's your take overall?
Yeah, I think it's just a headline mover. I mean, the market is always going to be searching for news headlines in order to push higher or even to push lower here. And I think this is one of those news catalysts. We have seen some of the damage, especially when you're looking at the FAA and some flights over the weekend where you actually had ground stops at O'Hare Airport for a couple of hours, really impacting a lot of consumers here. And you have seen consumer sentiment data really kind of falling off a cliff. We're at some pretty depressing lows here when you're looking at the sentiment numbers just in general. And you are seeing an impact when it comes to the economy. So seeing this potential bright sign that the government may be reopened, I think once again gives a little bit of a fuel for the bulls right now. And then you're also looking at potentially funding a lot of the areas of the market that have been kind of challenged right now. This funding measure that the Senate did pass by 60 to 40 here is going to actually fund those SNAP benefits or those food assistance programs until September of next year. So even though we are actually seeing this deal being created in order to fund the government through January 30th, if we do see another shutdown, a lot of those bigger programs are not going to be impacted, at least immediately. So that kind of gets taken off the table here, which will have a less of an economic impact. Now, there's still going to be some hurdles in the House. We'll see if they make any type of additional demands or try to revise the Senate's plan here. But you're really not looking for a House vote until maybe tomorrow. They have to have 36-hour notice before they actually can vote on any type of measure here. So we had the Senate pass last night. You're looking at pretty much midday tomorrow where the House could actually vote. And then we'll see if the president's going to sign off on this. So 8 Democrats did kind of cross over that line. They're being promised that there's going to be an ACA vote by December in order to extend those tax credits. That's still going to be a potential issue that is going to impact a significant amount of Americans. But once again, market's optimistic that this deal is going to be done, and we may be able to take that worry off the table. And Diane, maybe not this week. If we continue to get good news flow this week, probably going to be bullish for the market. But what happens when we get that flood of economic data from the government hitting the market? I think that's your next probably big volatility potential spike here in the market, because we're just going to get it all pretty much at once. I'm not sure when that's going to happen, but that could also create a little bit of angst when you're looking at some of the economic data. It's going to be very faulty, very diluted in some respects, and potentially very volatile.
I was just thinking that you're going to get all the data. You may not even get a full picture, because I was talking to Jan Hatzius, the chief economist for Goldman, on Friday, and one of the things he was talking about, one, if the shutdown doesn't end this week, you risk November's jobs data, for instance, because this is the reference week for that as well. And then when you think about the collection of the previous months, how can they even do a full collection, when you think about, say, October, for instance? All right, let's bookmark that. I want to talk Nvidia, Jensen Huang. It looks like the AI demand picture is just not letting up based on these recent comments from the CEO of Nvidia.
Yeah, Jensen meeting with Taiwan Semiconductor executives here over a hot pot, kind of talking about the artificial intelligence space, stating that without Taiwan Semiconductor, there is no Nvidia, and that demand continues to grow at a very aggressive clip on a month-over-month basis here. So that is obviously still trying to keep that narrative intact. We have seen over the last week and a half, 2 weeks, that the concern around the, let's say, the cycle of spend between major players has concerned some investors and traders, and then also maybe the over leveraging of some of these bigger names in the market, especially when you're looking at Oracle and their debt to equity ratio and how much they're actually spending for AI. But Jensen Huang continues to double down and say that demand is very strong. Taiwan Semiconductor, obviously a major provider when it comes to Nvidia for these chips, as well as just the broader market, it continues to be a staple, and it seems like that commentary is going to continue, at least for the near term. We are not really seeing any weakness when it comes to the hardware front as of yet, and until we actually do see that in the hardcore numbers from the earnings announcements, I think the market's still going to be slightly optimistic when it comes to the AI trade rather than pessimistic like we've seen over the last couple of weeks.
Okay, and I want to circle back on a topic that I saw bubbling up over the weekend that caught my attention. The Trump administration, I'm seeing, tweets from Bill Pulte, for instance, weighing these 50-year mortgages, which I think is wild. The idea, as I understand it, to try to kind of create more affordability. What's your take here?
Yeah, this is going to be an interesting development if this actually does come to fruition. Now, this is not the first time that we actually have seen a new mortgage being rolled out and sponsored by the government. We saw the same in FDR's term, where they rolled out the 30-year mortgage, and the U.S. government pretty much had to backstop that for the first 10 years. And so this is where the question marks actually arise here. A 50-year term mortgage obviously is going to increase interest rate payments, but it also could kind of have a little bit of an impact on trying to get into the home, make it a little bit cheaper initially. And we will have to see how they're going to structure this market. It's not only just offering these 50-year mortgages. What's going to be the backstop? Do you also see the Treasury rolling out a 50-year Treasury bond in order to benchmark these 50-year mortgages? We have to think about that as well. There's going to be a really hard time for a lot of institutions to hedge risk with that much duration unless they have something to really match to it. And so that could also be another announcement that we hear down the road. And what's the appetite for that? I'm not sure how much the appetite's going to be for a 50-year Treasury note here. But once again, an effort that's trying to attack and then try to open up the new home purchase market. We'll see if this actually does take into effect, if this actually is going to be successful, Diane. I think the only thing that you probably could question, maybe not so much the duration of the loan, which it seems like that's where the White House is going with this policy, but do you actually change the structure as far as the upfront payment or the down payment for that home? Maybe switching that from 20% down to 15% or 10% could also make it a little bit easier. This will not probably fix the lack of inventory in some pockets of the market, but initially you probably will see a surge in buyers trying to step in or even trying to refinance at those rates.
I like the way you think, KG. All right, let's get your levels on the S&P 500 today. What's your target to the upside and the downside?
Yeah, to the upside, 68.30, and to the downside, 67.30. So those are going to be the two areas of support as well as resistance. Want to make sure I get that right. I did misspeak on Friday of last week. Volatility is crushing to the downside, Diane, not as aggressively as I would have expected. So keep your eye out on vol. If we still kind of hang out at around this 18.5 level going into the remainder of this week or going into Thursday, Friday, maybe protect yourself for potentially a downside move here, but we are seeing the right, combination of sectors moving to the upside right now in order to push the S&P 500 higher.
All right, thank you, KG. That is our Kevin Gray, Senior Markets Correspondent. Appreciate it.